All right, good evening, everyone. Welcome to tonight's webinar. All right, so before we get started, let me just do a really quick sound check. All right, so I've launched a poll. If you can hear me, just click yes. If you can't hear me, then click no. Should be fine. I don't see any audio issues so far. 1 second. All right, so there should be no issue. So, all right, thank you for voting. Okay, so once again, thank you guys for coming to tonight's webinar. I'm your host as well as speaker, Brian, and I'm a dealer here at Flip Capital. Now, before we start into getting the core content of the webinar, I do want to bring you guys through a really brief introduction to Flip Capital as well as the products and services that we provide. So it will take around 10 minutes, so it should be really quick and easy. So let's just get that started. All right, so this is just a disclaimer that this presentation has not been reviewed by the Securities Commissions Malaysia, hence it's not an investment advice to buy or sell any products. It is only for educational purposes only. Investing is a really risky endeavor, so if you want to pursue any investment or financial decisions at all, please conduct advice from a licensed financial advisor. All right. All right, so basically Flip Capital was incorporated on the 7th of October 1995, and we are a wholly owned subsidiary of Flip Capital Holdings Sendirian Berhad, right? Formerly, you may have known us as Flip Futures Sendirian Berhad because at that time we only offered futures and CFDs, but now we also offer stocks. That's why we rebranded ourselves basically. So we are a trading participant as well as a participating organization of Bursa Malaysia, and we are also a holder of the Capital Market Services license, which means that we are legally allowed to offer you these products and services within Malaysia. All right, so we have around 11 Flip Investor Centers across Malaysia, which is our branch offices, with our headquarters located in Kuala Lumpur. So if you are within any of these states, feel free to drop by and ask any questions you may have. We have staff ready to assist you at any given time. All right, so this is the award-winning Bursa Excellence Awards. This is our track record throughout the years. So you can see that we've won many awards, as the years piled on. Just recently, back in 2022, we won the first runner-up for Best Retail Derivative Trading Participant, as well as the second runner-up for the Best Overall Derivative Trading Participant. So a really glamorous track record here to ensure confidence in our clients that wish to trade with us. All right. So we have a global network where we are situated in many countries throughout the globe, all the way from Asia, like China, Japan, to Australia, to the US, to UK. We are situated across the globe, and what that means is that we have a global coverage. So we are partnered with exchanges from from the US, like the CME Group, the CBOT, COMEX, NYMEX. We have ICE, Eurex, as well as Singapore's SGX, Hong Kong's HKEX, and the JPX and Tokon from Japan. What that means is that if you want to trade any of the products listed in these exchanges, you can do so through us, right? You can trade them on our platforms. We are your one-stop solution for your trading because we offer you many products. We have futures, things like index futures, energy futures, back to stocks, like local Malaysian shares, to US shares, Hong Kong shares, as well as the share CFDs, like local Bursa shares, as well as NYSE shares. And the cool thing is that the content I'm about to teach you tonight is applicable across any assets. So you can actually trade the way across all of these products. So that's a big plus, right? So do keep online for that. It's going to be quite interesting, right? So we are your broker of choice because we offer you 24-hour broking and execution support, as well as advisory services for our clients, the latest market news, as well as a wide array of products that you've seen just now. So we are kind of up there, with among the best brokers they are in Malaysia. So actually, you can also learn with the Capital. We offer free one-to-one coaching sessions, as well as constant free seminars and webinars, just like this one, as well as a free account opening process. So for the free one-to-one coaching, it's basically like an introduction to futures or CFDs or stocks, mainly basic product knowledge, as well as charting system where we'll bring you through a coaching session on our platform navigation. So if you are interested to join our upcoming seminars and webinars, you can scan this QR code to register for the upcoming events. I'll stay here for another like 5 seconds while you scan the QR code, but you can also find it on our website, so no issue for that. All right, moving on. So we also have the weekly market calls. On the left here, you have the market views and updates held every Monday on 11:15 a.m. by our securities research team. And on the right, you have the live counter technical analysis held every Monday at 8 p.m. by our technical analyst, Zain Al. So if you're interested to join any of these events, do scan the QR codes down below here. But then again, they're also listed on our website, so no issues on that at all. All right. Oh, I scanned a bit too quick. All right. So if you are interested to open an account with us, this is the QR code. You scan this, it's solely free and it's hassle-free because you can do it online at the convenience of your home or wherever you want to open an account. Just scan this QR code, right? Or if you want any help or you need any help, just reach out to me. I will be gladly to assist you. All right. So next up, we have our trading platforms. Right. First up, we have Flipnova, right, which is our trading platform for our futures clients. We have all the good stuff like, over 90 technical indicators. You can buy and sell just through a click on the chart. And we have the market depth trading too, so no issue on that. We also offer local and foreign products, so that's cool. You can scan this QR code for a demo on that, so no issue here. Next up, we have our stocks trading platform, which is Pulse Global MY 2.0. You can trade both local and foreign shares on here. We have charting indicators, your all-in-one stocks watch list and all of those stuff. So if you're interested, it is available to download on both the Apple App Store as well as the Google Play Store, as well as on our website. Basically, we have a link to download it through the desktop version, basically. All right, so next up, we have the Flip CFD Trader, which is the platform that our clients use to trade CFDs. All right, it's quite a user-friendly interface with all the live charting capabilities and price alerts. So if you're interested to use this platform, do reach out to us, no issue. All right, moving on. So next up, we have our promotions. And we have the trade and earn with Flip, where you trade more, you earn more. Essentially, you get a chance to win things like touch and go reload pins. You have Apple AirPods, iPads, and Apple Watches. And this promotion runs until the end of this year, up to the 31st of December. So it's actually ending soon, but don't worry because we have more promotions upcoming next year. So do stay tuned for that. All right, so I will just take a quick sip of water. Thank you for waiting. And we have arrived to our core content for tonight. Let me just drink some water real quick. All right, so let's get started. So the outline will go like this. We'll have first we have the liquidity concepts, the concept and theory, and then and after that we'll have the examples on concepts. And next up we'll go to the market pricing theory, the concept and theory part, and then we'll go through the live chart examples, right? Now, liquidity concepts is really important, even though it's not the topic or not the title for this webinar. It is still, I'd say if I had to choose one, I would say just master liquidity concepts. So do stay tuned for that. It's really important. It's the bread and butter of the way that I trade personally. All right, so liquidity concepts, right? Now, what is liquidity? Well, liquidity is essentially the buy and sell orders, right? For a transaction to occur, you need to have a buyer and a seller. Like that's when a trade or a transaction occurs, right? So, one second. Oh, is it? One second. All right, so orders equals liquidity, right? It's just a different name and it sounds cool as I put it in there, right? But essentially it's the same thing, orders and liquidity interchangeable. Now, in a marketplace, right, when you go to like a pasar, right, you go to buy and sell things, right? You're there either as a buyer or a seller, right? And you've probably heard of the phrase from anyone, right? You say buy low, sell high. It basically just means buy things at cheap, sell things at expensive, right? And we are trading in a digital marketplace, right? We're trading online, e-trading, which is why this is very important. We have to know how to buy cheap and sell expensive. We have to learn how to identify where buys and sells are positioned. And I'll give you an example here, right? Think of it this way. If I'm selling, I'm a seller, right? I want to sell in a market with many buyers, because if I'm the only seller, no matter what price I sell it, people want to buy it at, right? And if I'm a buying, which means I'm a buyer, I want to buy from a market with many sellers, because I can choose which seller to buy from, right? Using that same logic. Now, using that same concept, what if I told you that we could predict where most people would place their buys and sells at, right? On the charts, we can see where people will place their buy and sell orders at. And that once we identify them, we should take the opposing end of their trade, right? Sounds good? In areas of many buyers, we should be selling to them. And in areas of many sellers, we should be buying from them. So if I saw an area with many buyers, I'll be selling. If I see an area of many sellers, I'll be buying, right? Simple as that. Now, by that, what I mean is that we will often see the markets react to certain areas and then see a very rapid move away in the opposite direction. And I'll kind of mark it out right here for you. Here we have orders, right? And then you can kind of see how the market came up to these orders, reacted really quickly away from that. Same thing here, orders, market reacted heavily away from that. I want to see these types of reactions, right? And I'll get to the examples later on, but just bear with me for now. Let me just move. All right. So as we know, a candlestick has 4 main points, right? We have an open, high, low, and close. To identify liquidity though, which are orders, we will be focusing on the highs and the lows of candlesticks, okay? So this is, for example, a daily candlestick, right? If we zoom in at the top there, at the top wick, which is the high, we will probably see something like this, right? We'll see a resistance, right? Oh, let me erase my drawing real quick, right? So in this example, on the top there, people are taught normally, right, to sell at resistance and put your stop losses above. Now, if you are a seller, your stop loss would be a buy stop, right? So here we have an example of a buy stop, right, which is seller sell stops. Not only that, most people are also taught, hey, we have resistance here. I want to put a buy stop there so that once price passes through that resistance, I'm going to enter the trade in a buy, right? So what we can all agree here is that traditionally we are taught that resistance, sell at resistance, or trade the breakout at resistance. That's what we are all normally taught as. So what you would see the market always do sometimes, and this happens every day on every time frame, it may not be clear, but it does happen. And what you see the market do is that the market will come up into this area of buy stops, and then we're going to see it displace lower, right? Really low. Let me just change my pen color real quick, actually. So we'll come up to these buy stops, take it, and then come lower. And usually what would happen is that once we take out these buy stops, interestingly, it will go in the opposite direction into sell stops. Now, this is a high point. We have buy stops above a high point. Oppositely, if we have a low point, we have sell stops using the exact same concept. It's a support. This is a support. We are either taught to buy at support with stop loss below here, or we're taught to put our sell stops down here, and then price will come break that support, and then we can enter a sell. That's what we are normally taught as. I mean, according to traditional support resistance at least. So down here we have a lot of sell stops. So once the market takes buy stops, it sells down into sell stops, and then we will see a reversal to go higher. And this happens on any time frame, every single day. So on a daily time frame, it probably looks like something like this, right? We take out the high and then we take out the low. So if we zoom in, it's exactly the same. It's just from a larger time frame, you zoom in, you magnify it on a smaller time frame. And this is like a graphical example, but in the next slide, I'll bring you through an actual slide example here. Now, this is the crude palm oil futures weekly time frame, right? So it means that for every candlestick here, it's 1 week, 1 week, 1 week, 1 week, and this is a weekly candles low, right? So I'll zoom into this part here to let you see what happens when we come to it, right? So let's move to this. So now this is the FCPO daily time frame, right? And this is the exact same weekly low that we saw just now on the weekly time frame. Once price comes to it, right, you can kind of see how price just gravitates away from that weekly low. And remember, what is below a low? Support. Down here, we have a lot of sell stops. So once the market takes out sell stops, it gravitates towards buy stops, which is above highs, right? So let's see what the next slide shows us. And see how it seeks out the opposite end of the buy orders after taking out the sell orders, right? It's like a natural phenomenon. It just comes here and then it goes. I'm sure a lot of you have been trading for a long time, right? Once you have like a support here, you bought here, and the price comes down, it just takes you out, and then it reverses, and you're like, hey, what happened? And the theory is that this happens, market theory happens, liquidity concepts happen. Now, it is just a concept and it's just a theory, but it does happen, and that's what we as traders want to capitalize on. All right. So it took out sell stops first below weekly lows, and then it proceeded to hunt the opposing buy orders above weekly highs, right? It takes it out and it goes the opposite direction. Now, after this happened, guess what happens? The reaction after we took out the weekly high, the market immediately reverses, and you can use that same logic to target some of these lows, for example. Now, this is a daily time frame. One candlestick here is probably like 20, 30, 40 points even sometimes, depending on how large it is. And that is more than enough for you if you are a day trader, right? So let me just remove my drawings real quick. Let's move on. So see, in this move up alone on your left here, this is already 762 points for FCPO. And for the move down, it's already 378 points. That is more than enough for you to capitalize on. You don't even have to hold it for too long. Just exit whenever you feel like you've made enough profits, and that's about it, right? So here I have a few examples more on a small time chart or time frame, sorry. So here we have the black line, which is marked out as daily highs and lows. We have the yellow or kind of like orange circle, which is the market eating up orders, as I like to call it. And here we have the reactions after eating up orders, right? So I'll put that there. So here you can kind of see how we have a daily high here, and what's above a daily high? We have buy stops. Market comes up, the reaction comes back down, right? And then now we have another daily high, and this is again buy stops. What can you do with buy stops? You can sell them, right? So after the market comes up just above it, it comes back down, and then here we have another daily low, and it just repeats constantly, right? It repeats itself. It may not be a large move, but it will have a reaction either way, right? So here we have a daily low as this daily low, we have sell stocks below it, market comes down and then comes back up again, and it repeats itself across the charts on any time frame. Depends on if it's a large time frame or if it's a small time frame, it does happen. All right. So there are many ways to trade the markets, right? And the way I trade is by analyzing the market theory of buyers and sellers, aka liquidity. You can use this to pair it with your own current strategy, right? And it probably works as long as you have a solid understanding and database that proves you have an actual edge over the markets, right? So if you have any questions, don't hesitate. You can leave them in the questions section below, and at the end with the Q&A, I will answer all of your questions, right? But I'll just take a sip of water and we'll move on to the next section, which is the market pricing theory. But really, what I want you all to do after this webinar is to kind of go onto the charts yourself and to practice to see and spot these highs and lows, right? Whichever high and low is obvious to you, whichever pivot point is obvious to you, go onto your charts and try to spot them, whichever is obvious to your eyes. Practice and practice and practice, all right? All right, so next section, right, we have market pricing theory. Okay, so the markets that we trade on is similar with a physical marketplace, right? We've been through that just now. The only difference is that we are doing it online through our phone on a digital marketplace. Now, I keep saying this, but why is it so important to understand actually? Why does Brian keep repeating the same thing over and over again? Well, it's because traders need to understand the act of trading, right? We are traders, but many don't know what trading means. Now, trading, it just means buying and selling things, right? And if you are trading, you want to trade at beneficial prices, prices that benefit you. If you walked into a store now as a buyer, right? You are a buyer. Would you want to buy things at cheap? And if you opened a store as a seller, would you sell your inventory or your stock or your products at expensive prices, right? You do. You buy things means you save more money, you get a better price. And if you sell things for a higher price, you get more profits, right? So using that real life example and concept in mind, it's now time to move that into trading and see how we can apply the exact same thought process on the charts. We have to buy cheap and sell expensive. It's the reason why every time there's a sale at my nearby grocery store, people flock to it because they want to buy things at cheap. So now that we know the logic and concept behind it, let's kind of like go onto a trading view chart and see how that actually looks on the chart, right? So this is a trading view chart for FCPO, for crude palm oil futures, right? Now, what do you see on the right, on the far most right here? What do you see? These numbers, right? Now, these numbers may seem basic to all of you, but it's the price of which the asset is currently trading at. That's the price. And this probably goes across all asset classes because it's on TradingView, but it flies across all of our heads. We always miss the point, right? The whole point is that we should be buying at low prices and selling at high prices. But the question is, how do we know what's a low price or what's a high price? How do we define it, right? We use something called the market pricing theory. Now, to define cheap and expensive at a pasar or a marketplace in real life, we could go and compare prices, right? We need a point of reference, but we don't have that on the charts. What we do have is a range of prices. Now, what does that mean? What's a range of prices? This is what I mean, right? This is what I mean by a range of prices. We have a high point, a low point, highs and lows. Right? This is the range of prices that I was talking about. In real life, you can see them when you go to like a store, and then there are many different prices, but on the charts, there's only one price, so we need a different point of reference. Moving forward, so from a high point to a low point, we now have a range. This is that range, right? if you split the range in half, you now have 3 prices. You have the middle price over here, you have expensive price, which is here, and you have cheap price, which is here. This is that range. The lower end is always the cheap side, and the higher end is always the expensive side, assuming you use TradingView on its default settings, of course. And this is an example of FCPO again, and you can notice how price often comes into the premium pricing before continuing to sell off in a bearish market. Sorry, what I mean by that is, see how market comes down, it comes back up into this range. Remember, premium pricing, and then it sells off again, right? Now you have another high point, low point, market pulls back into here, and then it comes back down here, pulls back into premium pricing again, and continues to sell off, right? This is an example of it on the charts, right? 1 second, right, this is how it, notice how these pullbacks into higher prices are the best prices to enter at. You can enter shorts in these prices or sells due to the pricing factor, all right? So, okay, it sounds good, right? I'll just sell at the expensive price, easy, right? But how do I actually identify them and draw them out? Well, I'll teach you here right now. We have, in this example, an obvious impulse move downwards. It's a really, really obvious move downwards, right? So this pullback forms a pivot point, right? A low has been formed, and this is a really obvious pullback. You can't really miss it. It's been bearish till now, and now we have a pullback. It's really obvious to the eyes. You can't say no to this. This is objective, right? See how it forms a pivot point down below. And remember, a range is formed by a high and a low. So now we have a high point and a low point, which then gives us a range, right? We have a range to trade from now. So in this example, if I wanted to sell, obviously we are bearish, right? People can see this as a break of structure. We're bearish. We have big impulse move downwards. I want to sell from. Where do I sell it from? Well, seller, sell at expensive pricing somewhere around here. So now you have a filter. You know that, hey, I'm not gonna sell here. I'm gonna sell here. This is the best price to sell at, right? It just makes sense. So once the market comes into the expensive pricing, you look for your entry model, right? Now, I'm not gonna teach you what entry model I use, but my clients know. My clients see that every day. But look for your entry model, whether it be a bearish engulfing or a low time frame market shift or any indicators. Basically, find confirmation that the market is going to continue lower from where you are now, which is expensive pricing, right? Because the range is kind of big. Oh, I have horrible drawing. 1 second. So the range is kind of big, right? Obviously, I could say that I'll just sell here, but that's why you have to use multiple time frames and confirmations to kind of confirm that, hey, we might go lower from here, right? Just to confirm to yourself at least. So in this example, though, I'll just use a bearish engulfing candle. And then here I'll just use candle closure, stop loss above the current candle's high, risk 1 to 2 risk to reward ratio, which is basically I'm risking 50 points to make 100 points, for example, in this case, and see how it just like reverses downwards, so it's interesting to see how the market repeats itself like this every single day or every single week it happens, right? So here we have another example, same thing. This is actually the exact same chart, right? Let me just draw it for you, but this chart here, this whole space is actually the previous slideshow's chart right here is the exact same. So let's say after this pullback, we saw price break this high, right? So market has potentially shifted bearish, right? Because if you were to continue lower, it probably look like this, but suddenly no, we took our high. So now you may say, hey, I'm probably going to switch bullish for now. Same thing, right? Now, we know we want to buy because we're bullish, we look for a range to be made, which is, in this example, we wait for a bearish pullback and an obvious pivot point, right? So this is, for me at least, is to my eyes, is the last low before the big impulse upwards, and we have the last high before a kind of like sideways price action. So this to me is already a range, right? So we have a range, we draw to high to low a range, we have the middle line, which is the cheap pricing over here, right? And we are bullish, we want to buy, we want to wait for it to at least reach somewhere here. All right. So look just how it happens on the exact same chart. This is the chart that we saw just now, and this is the one that continues it. So see how the market comes into, you know, cheap pricing and then continues higher the original trend. So that's how you draw a range. You wait for an impulse and then a pullback, and then you draw that low to high, you draw that range here. I mean, it looks like this, I guess. But that's basically how you draw a range. Remember, a range is a high to a low or a low to a high point, right? In the previous examples here, all I did was I used multiple candlesticks, but all that is to a range is a simple high to low or a low to high point. Here we have an example of another high to low point, but based on just one candlestick, right? This is the high to low of a daily candlestick. Now, for my intraday traders, this is very important because this is something that you can use on a daily basis and it won't be hard to draw out, because just go to the daily chart, just draw the high low and draw a range. That's basically all you do, right? So if we look at that range just now, this previous range, right? If we look at this range, we zoom in onto a lower time frame, maybe the 1 hour, for example. This is what it looks like, right? It's still a low to a high point. It's just that on a daily, it's one candlestick. So using this example, let's just say the market opens here at 10:30 a.m. for FCPO, right? Based on the range, where should you sell at? And it's a sell because look, the market came up, came down, broke this low. So now we are kind of, bearish. So where do we want to sell at, right? I'll give you a bit of time to think, which is the top half, right? We want to sell at premium pricing. Okay, we want to sell at a high price as much as we can. So using that concept, you add on the concept of liquidity, right? If you want to sell, who do we sell it to? Buyers, right? Now, where are buyers located? Above highs, right? Because buy stops. Now, where is a high point within here, within this range, right? Where is the high point within this range? Here, I gave you the answer. Basically, this is the high point. But if we zoom in more, let me just draw it out for you one more time. This is a high point, but this is also a high point, right? So you want to sell within premium. So see how the market comes to it, takes it out, and then reverses lower. That's adding the concept of liquidity and market pricing theory, right? So I won't try to tell you how to enter, but using just the concept of I'll just enter at the high, stop loss above. Excuse me. This is probably what the trade could have looked like, right? It's what it could have looked like. So that's kind of like the theory of liquidity as well as market pricing theory mixed together. Now, something you have to understand is that this is really all I use every day, right? This is all I look at every single day, whether I'm using it on local markets like palm oil or foreign markets like gold or the Dow Jones or the S&P. This is all I use because I'm a technical trader, right? So The range theory is apparent across all assets and all time frames. The most important part is to understand the context behind the market. What is your bias? Is it bullish or bearish? And then secondly, once you've identified that, you have to know where to buy or sell from, and you can use that with liquidity concepts. Of course, you have to filter out the better buying and selling prices. You want to enter off of the best probability trades ever, right? And you can use that market pricing theory to help you filter them out, right? And you can use liquidity concepts to help you to know where to buy and sell from, right? But most importantly is the context behind the market. In the future, I'll make a webinar exclusively for this, so do stay tuned for that. But for now, just understand this is very important, because not every trade is equal and not every entry is equal. Find the best entry possible based on the pricing theory. All right. So here are some recent trade examples. All right. So here was actually mid of this month on the 13th of December. I'll basically just draw it out for you. But basically, I was telling to my clients that, hey, this is the daily time frame. I want to look to sell here and look to buy somewhere here, right? I mean, it's not really a signal. It's just I'm expecting it to find resistance in those areas, and you can enter them however you want to, right? So this is the M15 chart, which is the mini 15 chart. So we have a resistance, support, resistance, and support. So basically, I'm drawing out these support and resistance areas for my clients, telling them, hey, maybe you want to look at these areas of interest, and if it lines up with you, then it's a good thing, basically. So see, it's still a high point, and a low point, right? So let me move to the next one. Now this is the same trade day, like a market review at the end of the day, right? You can see how the market kind of like came out into resistance. We ate the buy stops around here. The market sold off into this low here, which has sell stops, and the market rebounded higher from there, right? I'll erase that. Basically, this is the occurrence I want to look at. Of course, you can use your own entry models, but I'm just telling you, hey, these areas might be key of interest to your trading for that day, right? So that's one trade. The next trade is actually this one, which is sent on the 15th of December, right? Same thing. We have a daily resistance, because this is the daily time frame, right? So daily resistance, we have daily support down here. So I'm like, hey, we might find resistance here, we might find support here. Watch out for these. All right. So zoom in onto a 15-minute chart. Just zoom in from the daily to 15-minute. I'm like, hey, maybe resistance at these highs right here and supports down below here. Now, you have to understand that I put in like hours and hours of work into identifying these levels, right? I've back tested like months and years of data. So I have the experience to know which might play out more depending on others. So it takes practice, right? It really takes practice to master the skill set. And same thing, once the market comes back to this level. Now, this wasn't a winning trade at all, but once it came down to this support, the market shot back up, right? So yes, I do take losing trades. Not every trade will be a winner, but that's when you have to implement risk management so that your winning trades are more than your losing trades. Okay. Now this was last week, but this one was just yesterday. Today is the 20th. This one was yesterday, right? So yesterday I'm like, hey, this is that range. High, low with that pullback. So this is the equilibrium, which is the middle pricing. So I'm like, hey, I expect to find resistance around this area, supports down here and down and here. So moving on, let me just zoom in a bit, right? So here we have the same thing on the M15 chart, resistance, support, resistance, and all that stuff, right? So I'll just move on to the market review at the end of the day and look, and guess what, market came into support, rebounded up into resistance, and then came down into support again. So It's not exactly the same every single day, but it will look similar. So you have to practice and train your eyes to know which one is similar or not, and which one will play out the best, right? So the examples that I showed, they were mostly scalps and short-term trades. However, it was based off a higher time frame, like the daily, the 4 hour. Now this doesn't mean that you cannot be profitable trading this style by holding long-term trades. You can. You just need to have realistic targets and proper risk management. You have to know when to get in and when to get out. By getting out, I mean you have to know when to take profits and when to cut your losing trades, because we all take losses. It's impossible you win forever. You just have to make sure that your winners are bigger than your losses long term. That's all you need to do. So if you're wondering, how do I join this group that you send charts every single day, basically I have a forecast group that I send every morning for FCPO, exclusive for my clients only, right? So what you receive is basically daily markups for both long-term and intraday charts, right? And market breakdowns, as well as compilation for fundamental analysis, which is supply demand data release, and further in-depth explanations of strategies, right? I show my clients my personal entry model, and any questions that they have, they can ask me whenever they want to, right? Now, do keep in mind though that this is not a signal service, right? This is only for references purposes only and for educational purposes only. Hence, PCSB or Brian, we are not liable for any trades that you take based on these decisions. I have to clarify that once again, right? So this is what it will probably look like most days. This is that group that I have, and I'll just send a market review at the end of the day with the entry model, that I send to my clients every single day. So that's what you will get from me if you open an account with us, right? So how do you join? Really simple, really simple. Just open an account with us. It's totally hassle free. It's completely free, no issues at all. It works across all asset pairs like stocks or share CFDs or futures, local and foreign markets. It works every single asset class, right? So just scan this QR code, or if you don't know how to scan it, you are welcome to leave me a message and I'll contact you after the end of the webinar, right? So that is pretty much it for this webinar. We've come to our Q&A section. If you have any questions, do leave them for me here and I'll answer them whenever I finish drinking my water. So I'll give you guys like a few minutes to think of any questions you want to ask. Feel free to ask them. All right, so we have a question here, which is, can you trade stocks with us? Yes, you can trade stocks with us. We offer both local and foreign stocks, and because our charting platform on the stocks platform, which is the Poems Global MY 2.0, we have the charting system, so you can also chart the same way as I did on the platform itself. So you can trade trade the same way basically on the stocks platform. No issue on that. Next is, all right, so here we have one more, which is, why don't you use any indicators on the charts? So starting trading, back in like 4 years ago, I used to have like a ton of indicators on the charts, right? But the issue was that I found out that most indicators were lagging, and by lagging, what I mean is that it only shows you a buy entry signal after the bullish move has already ended, so it's a bit too late. And the second issue is that I realized that sometimes maybe an RSI will be showing me a buy signal, but then the MACD is, not is telling me a sell signal, right? So it kind of conflicts the signal that I wanted to do, like do I buy or do I sell? I'm not really sure which one do I choose. So I just opted to find a method to trade that doesn't have any indicators. It's just clean, clear, concise. So I just figured I just not use any indicators. Right now, it doesn't mean that indicators are bad. I just never found a way to make it work for me. Right, trading is a very personal game. So yeah, that I hope that answers your question. Next up, we already have a flip account, but not under you, but can still join your group. Well, technically, I would have to, the whole thing is that it's exclusive for people that open an account under coaching clients, coaching branch, not just me, but under coaching branch. So you could send me a message. I'll leave you a contact at the end, but I do want to make the service exclusive for clients under us. But I can also contact you after the event, so no worries. Maybe we can come to a negotiation, of course, for that. So no worries. I'll contact you after the webinar. Sure. Do you also give chart analysis on stocks or stock recommendations? So some clients that do trade stocks with us, they do come to me and ask, "Hey, Brian, what do you think of Sunway right now?" And I can give you what I think of Sunway at that time. But in terms of stock recommendations, I don't tell my clients to, look at whatever stocks. They normally come to me with the questions like, "Hey, how is Sunway? How's Maybank? How is Tesla?" And I'll draw them out. But for stocks, it's more like a long-term perspective. So I do give them a more long-term view on where I think price might go and what might be a good price to, enter at, for a good range of prices to basically enter at. Yeah, so yeah, they do come to me for stock recommendations, but not me recommending the stocks to them. It's more them coming to me and asking for my opinion. Yeah, I do have clients like that. All right, do you have any other questions? Let me check once again. Let me refresh here real quick. Do you give analysis for other pairs? I mean, if the demand is high enough, yeah. If there's like multiple people asking me to maybe break down the S&P, for example, or Michael Dow Jones, then yeah, I'd be happy to break it down for my clients. But as of right now, the ones that are in demand really is palm oil. That's why I chose palm oil for the examples, because that's mainly what I do, and that's what my clients want me to do. So as of now, if there is enough demand for me to break down or kind of analyze a certain asset, like maybe gold or silver or whatever, yeah, sure, I'm happy to do that. Yeah. So bring if you want me to analyze a pair, bring your friends to open an account with us. It's totally free. So since it's free, it's fine anyway. Yeah. Who knows? Maybe in the future, I might do that. So all right. So I don't think there are any more questions. So with that, I want to thank you guys for coming out for this webinar tonight. I hope you guys learned a really valuable lesson. This will be recorded, so if you want to rewatch the whole content, do go online to our YouTube. It will be uploaded there basically. So now, if you have any questions that you can't think of right now, but if you want to contact me later on, do come to. This is our socials. We have Facebook, YouTube, Telegram, and LinkedIn. We also have Instagram as well as our website, flip.com.my. And if you want to reach out to me personally, I am from Kuching branch. So we have the phone as well as the email here. And if you are from Kuching, do drop by to this address here, which is where our branch office is located. And you can ask me any questions there if you can't think of one right now, basically. So yeah, do drop me an email or give us a call or just drop by and say hi. All right, so that concludes it. I hope you guys enjoyed this session, and I'll be making more like these in the future, trying to like refine the topics a bit more, like target different topics like trading psychology next month, or maybe something else this month, but yeah, I'll definitely be making more technical strategies or technical webinars like this one right here. So yeah, do stay tuned for that. And thank you all for coming. I wish you guys a happy Christmas and a happy New Year. All right, take care. I'll see you guys soon.